1.
Right, so we were just doing the depreciation for our boating equipment. So we've got 75,000, which is the historical cost, minus the 10,000 accumulated depreciation, and then we're just going to multiply that by the rate, which is 20%. So we'll get our depreciation for our boating equipment is going to be 13,000. So that means that we need to debit depreciation on boating equipment and it's 13,000 we worked it out to be. So that's our debit, and our credit is going to be increasing the accumulated depreciation for the boating equipment. So that's going to be go to 23,000. Now we're going to have a look at our next type of our next depreciation, and this is a units of use one. So depreciation on jet boats is units of use based on a useful life of 80,000 kilometres. During the year, the jet boats travelled a total of 16,000. So first we've got to work out the rate. So we take the historical cost of the jet boats, which is 140,000, and divide it by how many units expected over its life, which is 80,000 kilometres. So that means that we got 140,000 divided by 80,000 gives us 1.75 per kilometre. And so we're going to take our 16,000 kilometres for the year and times that by 1.75. So we've got 28,000 as our depreciation. Okay, so we're going to have depreciation on jet boats. It's the debit. And our amount was 28,000. So that's our debit. Our credit is going to be to accumulated depreciation on jet boats, and that will take us to 58,000. Right. Website expenses allocated 80% distribution and 20% administrative. So we're going to our website expense and we're going to split it up. So 80%, which is 13,600, is going into our distribution. So 13,600 is distribution costs. And then the 20% is going to administrative. So 3,400 is administrative. And then we've got some information about the owner investing cash into the business, and that's got nothing to do with with the income statement. It is something to do with statement of financial position. So our equity, equity section on our statement of financial position will show this increase in capital. Right, so what we need to do now is do the income statement. So first we put up the heading. So that's the income statement for, and the name of the business is Jet Boat Tours. For the period ending 31 March 2012. Right, so our first thing, so we go back and have a look at our income statement. That's our trading one. We're doing a service one, so we're just going to scroll back. Right, so we start with our revenue. Okay, so we start with revenue, and if we're a sales firm, that's going to be our fees one. So in this case, we've got boat tour revenue, of 174,000, and boat hire revenue of 59,000. And then we're going to add those two together. It's 233,000. Now we're going to add in other income. So our other income is nothing. We don't actually have any other income, so we're just going to leave. So that we've got nothing in here for other income. And so we're going to have 233,000 is our total revenue. Now we're going to go less expenses, and we're going to split up our expenses now. Now it's up to you whether you go through and split them up or whether you do it as you go. So our expenses are going to be boat tour expenses is going to be our first group one type of expenses. So these are going to be anything that's related to doing the boat tour. Cash on hand is a current asset, so we're not going to use that. Office expenses is administrative. Drawings relates to our owner, so we're not going to use that. But we've got our boat drivers' salaries of 48,000. Our discount allowed is going to go on our administrative. Website expenses, we've already split that out. And that is 13,600. Bad debts is going to go in administrative. Insurance is under administrative. Bank is a current asset. Accounts receivable is a current asset. But our boat fuel and maintenance will go in here. Because it relates to doing and it's 28,400, so it relates to providing the service. Interest on loan is going to go into finance. Jet boats is a fixed asset. Goodwill is a intangible asset. Boating equipment is a fixed asset. We've got prepayments, which is a current asset. Doubtful debts we're going to do under administrative. And we've got our two depreciations, which relate to our distribution. So we've got depreciation on boating equipment of 13,000 and depreciation on jet boats. So remember, this first category for a service firm includes all those things that we need to actually provide the service. And if we were doing a trading one, that would be our distribution costs. So anything that it costs us